Welcome to Plain Talk with Trillium Wealth. I'm Steve Laska, managing partner here at Trillium Wealth. And as usual, I'm joined by my partner and our chief investment officer, Matt Gomoll. Matt, I'm very passionate about today's subject. And you certainly have a lot of knowledge here, given that you're not only a chief investment officer, you do take care of a lot of our clients, particularly our more sophisticated ones. So today I want to talk a little bit about the why use an advisor as opposed to doing it yourself. And I say that in the context of this, like, I believe that do-it-yourself investors, they can do fine. I mean, I know a lot that they've done fine, right? But I'm very passionate about the fact that there's so many moving parts and there's so many ways to enhance that experience. And it depends on, certainly if you want to bounce your check to the funeral home, you may or may not need an advisor. If you're somebody that wants to leave a legacy to your family or to a charity or something else and beyond, like virtually all of our clients do, using an advisor is a significant difference above doing it yourself. And again, not that you fail doing it yourself, but your success rate on using one is pound for pound, worth everything that you put into the relationship.
Yeah, I'll start with a story. I recently had a meeting with a fellow veteran, got referred to me and wanted kind of a second opinion on his portfolio. He's working with somebody today. And as we talked through things, I gave him some tips of what he should maybe change in what he's doing, where money's going, and, offered to work with him if he wanted to. He came back and said, "Hey, I don't know that not right now is the right time. I don't think I have enough complexity. All the things we talked about, I don't know that I need to engage you right now." And I was like, "Cool, let's, come back to me when your life's more complex. I'm happy to super easy. It's easier than ever to research a basic portfolio, get low cost investments, and just stay invested as long as you can, tolerate that." And it worked great, right? Added some value for him, decided now wasn't the right time, and said, "Hey, you can do this yourself. And I'll give you the tools. You could have researched them yourself and we'll point you in the right direction. You'll be okay." And that can work great. Where we see adding tons of value is everything like basic investments. You can research that stuff. There's a lot of nuance that goes in there. We see adding value around risk, concentration. A lot of people might be individual stock pickers and not realize the risk that they have. And when everything's going up, great. It's that downturn, right? Managing through that, managing correlation and how things move together, that we really take a broader focus on how everything interacts together. And then there's just tons of aspects where, like you said, there's a lot in financial planning, behavioral management, taxes, estate planning, insurance, risk mitigation that comes into play that helps just create better outcomes for folks.
Yeah, I think we need to be clear though on, like, I don't disagree with anything you said. In fact, I think there's a lot of investors that if they are really, really low in the complexity, it totally makes sense for them to do it themselves, right? And consequently, like in our firm, we actually look at people and say, I've looked at people and said, you don't really need us right now. Like you have a $60,000 in an IRA and like no complexity at all and none on the horizon. I think what people have to watch out for is, when is it going to happen? Like we always reference the Vanguard study that says the difference between having professional advice and doing it on your own is 3.5% annualized. Now think about it. That's Vanguard. They're the biggest direct company in the history of the world. Like they're built on direct, and they put that out. I think where the misnomer and what I'd like to talk a little bit about for our clients is it's not a straight line. Like if you looked at your investments every year, you wouldn't be like, well, they didn't outperform by 3.5% this year. They didn't do outperform by 3.5% this year. It's cumulative. And it's something where in 1 year, it can be 10 or 15%. And we have some examples of this, Matt. Like you were looking at a gentleman where the difference on how his portfolio was structured for his age, doing it himself with some knowledge on investments, it was $1 million difference. Now he's got a lot of money. So when I'm saying that he could do it on his own, okay, he has $4.3 million. that was even him getting advice. He'd have 5.3 with good advice in a short amount of time. So talk about, it's not just the concentration risk of I think I can pick my own stocks. It's doing it yourself or coming for one-time advice when things like we talked about on our things on the Fed a week ago. Like things happen fast, volatility is moving, and taking advantage of those or getting taken advantage of is really the problem on not having advice.
Yeah, I think that's right on. Having a team, in which we do, of different experts that all work together to get that comprehensive picture and bring different perspectives as your life changes, as circumstances change, whether it's in the market, the economy, your employment, your charitable giving, having a family, all these things. As those things change, having a deep bench of people who are saying, yeah, we know what to do here. We've seen it. And we're going to make sure the other part is not only can you give good advice, but it also execution, making it happen. Plenty of people, I talk to people in their 50s all the time who don't even have a will. And it's like, those are basic blocking and tackling things that we want to make sure get executed. Not considering things, I got to a point a long time ago where I said, I can do my own taxes, TurboTax. When my life became just that complex enough where I wasn't sure whether I was getting all the deductions, I said, nope, I'm done. Like that's where I bring in a CPA, because I want to make sure, and they're worth every penny of handling the complexity in my life and making sure it works.
So I think one of the big things on complexity, by the way, and again, I really enjoy our client base. I know not everybody's like this, and it's okay not to be, but our clients, by and large, they want to live a good retirement, and they absolutely want to leave a legacy. They do, right? And they don't want to, like you just talked about a will, and some people are like, well, so what? All my stuff's going to go to these people anyways. Like, sure, after it goes through probate and your family goes through a lot of sitting around and waiting around. And if people knew that, they would be like, well, I probably should just have a simple will then. Like all my family who I want to leave a legacy to, they would have access to this sooner. We had a client recently, Cherry had a client, and this is where advice like on all levels makes a difference. This gentleman is a lot older, and you heard about this because you and her work very closely together. How his trust was structured, it seemed like his own estate planning attorney didn't even recognize how it was structured in a positive way. I mean, I think Cherry said to me that she saved his heirs, even with all the different like estate planning exemptions and all. It's projected like if something happened to this gentleman who's in his 90s, by the way, tomorrow, it would be a $300,000 savings to his family. Most of us, I know our clients, I don't want to get political, but most of our clients, regardless of what side of the aisle they're on, they don't want to give it to the government. They want to give it to their family. They don't want their legacy to be taxes. They want their legacy to the family. And these are not simple concepts that you can Google or even AI today. Because again, there was an attorney involved in this one, and she found through her education and her hard work a way to save a client a lot of money.
Yeah, that was a great example, Steve. Huge win for Cherry and that client, saving that family a lot in taxes. Stuff like swapping powers, able to move assets in or out of a trust, really can save a ton. Same with step up in basis, where we invest, how we tax manage things, really is part of the wealth transfer conversation that we start pretty early. We do not wait till somebody's 90 to start having those conversations. It's just much earlier. We've seen clients that pass away with all their money and their kids inherit it, but their kids are already 65 or 70 years old. And by then it's like, okay, great. Yep. I'm going to have more in retirement. I already had retirement savings. I've just had an experience with a client who did that, and her kids started gifting it down the line to their kids and their grandkids and helping them out. And that's what I love to see, of getting people the confidence of saying, you have enough, you're in retirement, this money can start transferring today. And that might be 60, 65, 70. For every client, it's going to be different. But being able to have that impact, whether it's charitable or family, during your lifespan is just a wonderful thing to see.
Yeah, we've also seen like historically, again, I've been in this business for a long time. it makes relationships with husbands and wives better that they turn around and they can hold somebody else accountable. Number one, right? I have watched many, many clients come to you and Cherry during our time together who it gave them peace of mind when you guys were able to work and collaborate with the client and tell them, you could retire any day now. And some of them keep working, but they also say their BS meter, so to speak, is a little tighter because it's more enjoyable to go to work every day when I don't really have to, right? You're like, I don't have to put up with this. So you play a little looser. And that ability, again, most of us want to leave a legacy. Most of us want to have a great retirement. I've yet to see a client who's come to us or some other advisors that died with nothing. Most die with a pretty good legacy. Some were even talking into spending more money. And that's exciting for them too, is understanding, because money is power, understanding how you can use it, understanding how you can make your life better. But I do want to stress something, Matt. I want you to talk a little bit about this. All professional advice is not equal. In fact, that to me is a reason why some people say, I don't need it. They literally can look at people. There's a lot of investment advisors out there. In fact, too many that are like, I can do better on investments than you. Maybe you can, maybe you can't. But that's a premium I don't know if I'm going to pay for unless you can tie it for me, right? Unless you can tie everything together in my life and give me the why, and that I'm going to sleep better and you're going to be able to take these things. You're going to give me all that. Like, talk a little bit about what it means to find a good advisor and good advice. And I think we're great, but I know a lot of people that I would refer others to if they asked me. And I know a lot of people that, without hurting people's feelings, I'd be like, yeah, I don't think you should do that.
Yeah. What's really cool is we've seen this transformation in the industry. And so long time ago, it was just stockbrokers, people calling you up, selling you stocks, getting a commission based off of that. And their value was based off of whatever we picked and got a commission for that transaction. Very transactional nature. Shifted to adding financial advice and fee-based planning and all those things. Still, a lot of folks just focused on investments, and that was what they tried to quantify their value and say, okay, you paid this, but look what I did. And that can get you chasing returns, taking risks, not being allocated the right way. And we've seen in probably the last 10 or 15 years, a real move to true comprehensive wealth management that includes investments as part. It's a foundational layer, understanding cash flow, understanding a basic financial plan, retirement plan, and then layering all these other things and saying, we can do this in-house. We can give tax strategy. We have resources available to help you with estate planning and relationships to make that happen. Advice for business owners, advice for risk mitigation and insurance, all these things that need to come together, because the financial life of somebody is very complex, and most of the financial mistakes that you're going to make in life aren't investment mistakes. I bought at the wrong time in the S&P and it went down that year and that felt bad. That's a timing that was out of your control. There's a lot of stuff that people do with putting money in the wrong type of account, not considering the later tax impact of it, sitting in too much cash, making bad investment decisions, and having not enough liquidity. All these things are part of making good decisions. And there's a lot of, there's a minefield out there of things that you can do wrong that we want to help guide you through.
I'll tell you, I'll give you some simple ones I've seen through our firm and where we give some good advice, right? And you and I were talking about this, Cherry and I and other advisors have talked about it. It's like the people that have been predisposed to not understand leverage versus debt, right? Leverage is a good thing, right? Like, I kind of look at the world, if I have money to pay for something, if I could pay it off anytime I want, even if I use leverage to get it, then I don't really have debt. It gets down to that whole net worth thing. Like, if I have any reason to get rid of it, I can just simply get rid of it. As simple of a decision as buying a car. When car companies are, making, they're out there giving you 1.9% or 0.9% for, if you have good credit, which a lot of our folks do. And folks are like, well, I just want to take $70,000 out of my account because the last advisor said I have $70,000 to just pay cash. And we're like, yeah, you're portfolio is growing at 12%, right? Inflation's 4%. Like, why would you not just take 2% free money? These are little decisions that I think, go a long way. Talk some about like our team, and you have some, and we have other people on our team. Like, what designations mean out there? Like, talk about what our advisors do from a continuing education standpoint, as opposed to somebody that doesn't have any letters next to their name, and how much harder, like a CFP used to be easy to get. Now you have to have a college degree and do a lot of things.
Mm-hmm.
You have a bunch of different designations, and it causes you time where you have to do continuing ed every year to maintain those. I think that's a great thing, by the way, for clients, even though some advisors, they get away from it because they think it's a pain. I think it's important for clients.
Yeah, I'll use an analogy from the military, right? When we were in Iraq and Afghanistan, we had 1-year rotations, and we would say that we fought the same war 20 times. Nobody, it wasn't a process of learning and getting better and compounding wins and stacking them on top of each other, right? And so in this industry, you can see that as well, right? Somebody kind of capped out years ago on their knowledge and their learning and their desire to stay up with the latest on taxes, investments, estate planning, all these things. And now they're just repeating what they know year over year. And that's not great, right? So 2 things there. I think a team is great. I think having multiple people around that encourage you to learn and get better and say, hey, I saw this. Did you know that? No, I didn't know that. Like, Jerry brings me stuff all the time. Then I'm like, I never saw that. Cool. Like now I see it and I understand it. I have a reference point. I might not know everything about it like she does, but I at least know to look for it now and be triggered. So that aspect of, we want to continually be better. There are a lot of firms doing that. And that's the differentiator of saying, I put time into this, cared enough to hone my craft, improve myself. And now I have to continue to do that year over year, stay up, stay current, whether it's the CFP board or CPWA for Cherry, there is content put out that we have to stay current on, which is wonderful. And that's what we want to see.
Yeah, she literally, that tax savings we're talking about was part of, the CPWA is like the PhD of planning. That was stuff that by getting that designation, she learned more about. By doing continuing ed, she learned more about. So that leads me to something that I think is important too. Like, so first of all, again, I believe that people with even lower levels, but you can get too low in the complexity, but with a little bit of complexity should have professional advice. I think there's marketing and there's reality. And what I've always been disappointed on our industry is the people that market and say, I've got a team full of these people. The test for me would always be, as a client, okay, like the next time I show up to a meeting, are one of those people videoing in for it? Like, can you do that? Right? Because some of it isn't real. It's a website and it's a bunch of people that they don't really have access to. And you just talked about the conversations that happen in our firm all the time, where Cherry might just call you from a client that you're not even involved in and say, Matt, I need to get your advice on this, or vice versa. The conversations, and this is what it's hard for a do-yourselfer to do. Matt, I use a lot. I'm getting more and more into using AI, right? I have conversations with AI. I don't just ask a question, because when I do ask a question of AI, I will literally say things to Claude like, Claude, you're not understanding what I'm asking. I'm asking this. And it'll say, I'm sorry, Steve, I did not understand that. Now I get this, right? The conversations between humans, and even if we employ AI, is how you get the best advice, as opposed to, I heard you say something because I might not have heard it the right way or what you were really trying to get to. And now this happened. And you had a client you talked to me about recently where they wanted to source money from a certain place. And you told them, you're not asking the right question. You're coming in and saying, I want money from that. And when the person reset and said, well, what I'm really trying to do is this, Matt, you were able to come back and say, that's not the best way to accomplish it. I don't think a search engine does that for you.
Yeah, that comes down to knowing the whole picture, right? Which is our job, to maintain the big picture view and allow that client to come with, here's my intent, right? And we use this in the military too. It's like, here's my intent. Here's what I want to have happen. I'm not telling you yet how it's going to happen because I don't know how it should happen. that's where we get to have that engagement and talk through, all right, we want to get to here. Also, why? Like, what's the why behind you want to get to there? Okay, I got it. You want to have the ability to buy this, real estate, rental property, whatever it might look like, some point in the future. If I know that's what we're trying to accomplish, now I get to look at the big picture and say, well, where would we actually source that from? Yes, you have investments. We could just sell out of them, pile cash, do that. Or we might say we could borrow against investments, like a HELOC, but for securities. We might be able to do that. We might be able to just take a loan on that property. So there's a lot of options, and we want to see that big picture and come with 2, 3, 4 options that are going to accomplish the intent in the same way. And each one of those is going to have trade-offs, pros and cons, and that's our job to lay that all out, right? There's pros and cons to each one of these options. Here it all is. Now let's make a plan of like which one of these we want to pursue.
I think that my advice to people would be, is there are 3 very high level things that a good advisor should do for you. First and foremost, I think is easy, but in today's service model across the world, it seemed to have gone away, is that advisors should be very good at being reactive to your needs. Like you're calling them up and saying, I need this. And they understand that money is important. And if you're asking for it or you're asking for something, that there's always a reason. Like money's a stressor for people. So they should be great at being reactive. A good advisor should also be very good at being proactive. Like, hey, your wife is pregnant. We're already starting paperwork on 529 plans. You can talk to grandparents, stuff like that, right? We know what's happening a step ahead. And then finally, I think to be a really great advisor, your advisor should be anticipatory. Your advisor should be looking at things that you conceptually aren't thinking about today. Like, what does it look like 15 or 20 years down the road? And it gets to what you said a second ago. If you use a good advisory team, that's not a team that fought the same year 20 different times and has that experience. The reason why they can be anticipatory is because they've seen some facsimile of your story before, right? They're like, Matt, I've seen your family before. I've seen your trek. I've seen you have 2 people that work that are high level professionals. And here's where I think you're going to want to be down the road. Like, you're not thinking about charitable legacy today, but we're going to start thinking about it for you because we've seen the profile of the type of person you are when your kids are out of the house, what that looks like. And again, there aren't as many as I'd like to do it, but there are really great advisors out there. And all the ones that I know, whatever you think the cost is of having professional advice, they can all demonstrate to you by using past examples, if you haven't used them yet, that they've earned that with their best clients many times. And their best clients, I feel very strongly like our best clients would tell anybody, hey, Trillium was doing things that I would not have been able to do on my own, by the way, partially because I wouldn't have known the right question to ask. I wouldn't have known what the future looks like. And so far, maybe that'll change. There's not a search engine that knows what the future looks like for you or somebody like you. It's almost too encompassing. It's too broad to serve your needs.
Yeah, I definitely, like, when I'm bringing on a new client, I make a point to say, if it's something you're worried about, talk it over at the dinner table before you go down a rabbit hole. Cause just like searching for medical advice, you can go down a rabbit hole and see certain things and not really have the context. I'm like, just toss it over to me. It's probably a 5-minute answer, right? I've probably seen it before. And if I haven't seen it before, I probably have enough context to go to the team and get an answer and understand the problem well enough to do the research for you and get the full picture and the right answer, right? So that's where I really see us adding a lot of value, is taking those problems off the plate and really understanding the context that those problems live in.
So what I would tell everybody out there is, look, if you're doing it yourself today, it doesn't hurt to explore what a relationship with an advisor would look like. Most of us out here understand no, right? It's like, it's fine, but you probably should assess where you are. You might have a more complex life than you think. You might think you don't have complexity, but a pro can show you that you do. And the other thing I would say is, if you have an advisor that you're unhappy with, you should get a second opinion. And here's why. Maybe you need to get rid of that advisor, but here's a different view. Matt, you've done it. Cherry's done it. I've done it. Jamie's done it, Tom's done it, have looked at people and said, your advisor's really good, right? We've all seen that. And a really good person that cares about this industry and cares about clients. I've certainly done it more than once where somebody's come and said, I'm unhappy. And I'd be like, that guy or gal has done a really good job for you. Like, you just don't understand what they've done for you, and you're in the right place. And I think by the way, every great advisor has quietly made that promise. Like I said, I know others that have done it. We're not the only ones who have done that. But if somebody is overselling you when you think that, you have a pretty good person, you might be right. And that might be the better way. So I encourage everybody there, explore the opportunity to talk to somebody. If you have somebody that you're disappointed with, you should be very demanding of your advisor. It's a very important thing. So you should be demanding, but get a second opinion. And also don't be surprised if the people on the other side look at you and go, you actually have somebody really good. Stay with them. So with that, we'll see you next. I think next we're going to talk about IPOs and some of the fury. We may do something in between there, but we're going to talk pretty soon coming up, Matt, about we're going to have another couple of big exciting IPOs coming forward. One's like SpaceX with OpenAI and Anthropic. So I look forward to having that discussion. If you have something you want us to talk about out there, please get with our team and let us know the topic. We'll certainly, we have content. We can talk about almost anything that people want to hear about. And also click and subscribe and share the information with others that you know. Until next time, we'll see you.
Take care.